On this channel we talk a lot about investing and particularly exchange traded funds or ETFs, but we don't talk enough about what you can actually invest in. Let's correct that right now.
In this video, we're going to look at possibly the 5 best exchange traded funds available on the London Stock Exchange, which are perfect for UK investors, no matter what they want to invest in.
I own many of these ETFs myself, so in one way they could be considered to be Money Unshackled approved. Let's check it out.
Welcome to Money Unshackled, the investment channel that says you and your finances free. This is Andy, I'm Ben, and if you like what we have to say, click the like button and hit subscribe.
Also, if you want to support the channel, check out some of the affiliate links in the description below. We've listed loads of cool stuff that will help you become financially free. Let's get into it.
Why ETFs? An ETF is simply an investment fund that is traded on a stock exchange similar to a share. If you want fantastic diversification, low fees, and an amazing return over the long term, then ETFs are our vehicle of choice.
Most ETFs will track an index, and if you're scratching your head wondering what an index is a measurement of a section of the stock market, such as the FTSE 100 and S&P 500.
There are a number of ETF providers in the UK, two of the most popular being iShares and Vanguard, both of which offer loads of ETFs that can be bought through any decent investment platform.
One of the great things about ETFs is the choice. You can invest in almost anything you can think of. My preferred approach is to invest in ETFs that tap into certain geographical markets. For example, I might invest in one ETF that gives me exposure to US stocks and another that gives me exposure to emerging markets. Now that we've covered the basics, let's check out the top ETFs.
Number 1. iShares Core FTSE 100 ETF. From the name, you've probably guessed that this tracks the FTSE 100 share index, and it is absolutely massive, including £6.3 billion worth of assets under management.
As UK investors, we feel that almost every single investor should be holding this ETF. You're getting exposure to some of the biggest UK companies, and for a crazy low fee of just 0.07%, which is just a 70p fee in a £1,000 investment. That's insane.
Don't think that just because these are UK companies that it is necessarily UK focused. The FTSE 100 contains companies which earn the majority of their incomes worldwide outside of the UK.
The FTSE 100 is packed full of incredible dividend payers such as HSBC and Shell, so as you would expect, this ETF also pays out excellent dividends and has a dividend yield of 4.15% and pays out quarterly.
Here you can see the performance over 10 years with dividends reinvested. The green line, which is the ETF's performance, covers the blue line, which is the actual FTSE 100. This is great news as it shows that the tracking error is almost non-existent. In 10 years you would have almost tripled your money.
Number 2. Xtrackers FTSE 100 Equal Weight ETF. This is one of our favourite ETFs because it invests in the FTSE 100 but with a little twist. One of the big flaws of the FTSE 100 is that the top 10 companies actually make up 44% of the index, meaning it's not as diversified as you would expect.
However, this ETF invests 1% in each company in the index. This is great because you get better diversification and also smaller companies tend to give better returns. By allocating more of your money to the smaller companies in the FTSE, this ETF should in theory outperform other FTSE 100 ETFs.
You can get all this for a reasonable fee of 0.25%. However, the fund is very small in comparison to the one we've just discussed, with a total assets under management of just £16.1 million.
Number 3. Vanguard S&P 500 ETF. It goes without saying that every investor needs to have exposure to the world's biggest market, which is of course the US. The S&P 500 is the index that tracks the 500 largest companies in the US, so what better way to gain exposure to the US market than by investing in this ETF, which does all that for you.
The Vanguard S&P 500 ETF comes with a low fee of just 0.07%, and you'll get exposure to US giants such as Apple, Amazon and Google, and so much more.
In fact, this is great for UK investors because our own stock exchange is very light on tech companies, but the US is packed full of them. And it's these tech companies and companies like them that are most likely to see the huge growth as they continue to innovate and dominate world markets.
This table shows cumulative performance, and you can see it has tracked the index very closely, which is exactly what we want to see. Although the ETF hasn't been running for 10 years, it's interesting to see that you would have almost quadrupled your money, less any small tracking error.
Number 4. Vanguard FTSE Emerging Markets ETF. We are all told that the best returns come from emerging markets, but you probably lack the experience in order to go out and find these returns by yourself. Well, you don't need to, because this ETF does it all for you.
You'll get exposure to over 1,000 stocks across many of the fastest growing economies, such as China, Taiwan, India, Brazil, and so on. This is great, as you get lots of diversification to companies and countries that are likely to outperform more established markets.
I know what you're thinking. To invest in this kind of fund must cost a fortune. Well, you'd be wrong. In fact, to invest in this ETF, it only costs you an annual fee of 0.25%, which is incredible for the exposure that you're getting.
It also has a higher than expected dividend yield of 2.63%. You might expect this to be a lot lower considering the stocks and countries that it's invested in, which is a great sweetener to the capital growth that we would also expect.
Number 5. SPDR S&P UK Dividend Aristocrats ETF.
This ETF aims to invest in an index that tracks the 40 highest yielding UK stocks that have maintained or raised the dividend over 7 consecutive years.
I guess you could consider it a fund for reliable dividends, or as reliable as they come. We like this ETF because we love cash flow. There's a saying that a bird in the hand is worth 2 in the bush.
Out of the 5 ETFs mentioned, this is the only one I don't actually own, but it's one that I will consider for the future.
I suppose the biggest problem with this fund is that they only distribute their dividends twice a year, which is a shame because the stocks underlying the fund are huge dividend payers themselves. We'd like to get our hands on these distributions quicker.
The fee on this one is a little higher at 0.3%, which isn't bad, but we always like to see them a little lower, especially as this one invests in accessible UK stocks.
Question of the day: what ETFs are you investing in and why? Why don't you tell us in the comments section?
Thanks for watching. On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is Money Unshackled. See you next time.